All right, so we'll shift now to XIV. Now XIV, you will notice here, it has an RL10 value of 46, and the RL270 is at 40, so this is like a $6 divergence. And so what that says is, if we divided that into two chunks, if you were going to play VXX on this one, if there was a violation below 44 and you wanted to use a $2 stop as your risk, you would still have a reasonable trade trying to capture $4 on the downside. And if we saw a sharp increase in volatility because of a news event or whatnot, that's the kind of a move that we would expect to see in VXX. So any kind of sharp response to surprise would cause VXX to go up that much, meaning XIV would come down this much. But it wouldn't be a change in the volatility regime until it were to go below, say, 36. So if I saw XIV pull back to 40, then I'd be looking for a resumption of the long-term trend, because that looks like what a volatility spike would produce in VXX. But as it stands right now, this is still, I have a swing position on in this one, not a full position, but I'm ready to go turbo on this intraday. So if it resumes, I'm ready to go turbo, and if it fails, I'm ready to hedge with VXX, so that I don't have to get out of my long-term position. Okay, let's clean that up. And if we look at XIV under our kind of traditional lens, the RLCO lens, this still looks very good. We had an RLCO outside of the river, so the price target after that was the Bollinger Band mean. It held support above the Bollinger Band mean. I take that as a good sign. We have 2 days of buying pressure here. Really want to see it get above 48 when it's all free and clear. And in the meantime, we can use 48 as a price target. So 45 to 48 is a $3 frame, meaning if you can manage $1.50 worth of risk, you can reasonably aim for $3 on the upside. But you got the 270 is looking good. The Dragon and all the price has been riding the north shore of the river, except for those last 2 days. That would be a typical buy on dip opportunity. And in fact, Thursday was at the open, and that quick sell-off was a nice opportunity to get long. Let's see what that looked like intraday. All right, this is Thursday and Friday on 30-minute charts, and this was that nice early morning move, big gap down, and then a nice strong move up. And you should realize that that is a move from 43.80 to 45.70. That's a $2 move intraday, and we're typically managing 30 cents or 40 cents of risk. So that really represents potentially 5R of intraday gains just in that move. And I like the fact that it failed to fail further. Now, I would have liked to have seen more retracement back up to the 270. But on Monday, if there's no negative news to respond to, it wouldn't surprise me to see it march right on back up in a stable way. And so that's still, I'm still looking at like 47, 48 as reasonable fair value on this on the 30-minute chart. So that looks pretty good. If we dial that down even further, this is what that move looked like on July 11th. There we go. Or July 10th, excuse me. This was that big gap down. Morning hook, you had a swing low, a higher low, price re-entering the river, and then that nice orderly move up here to 45.60 from 44.20. So that's the move right there. Okay, so let's take a look at some of the swing patterns now, enough on the intraday stuff. Okay, we wanted to take a look at Home Depot, so we'll do that. Very nice. So what we have on Home Depot here, we had on Friday a gap down outside of the river and outside the river. And if we had a price moving north, we would say, all right, this looks like the long-term trend is this. The 270 is sloping up, and this would be a resumption of the trend. We could look for price targets at 80.50, 81.50, and 83. And yet, if we saw failures below 79, I think we would certainly wouldn't mind getting short. And if it fell below 78, chances to get really short. So this is a nice critical state here in Home Depot. I would base it off of that, the real body of that candle, in terms of playing a trade north or a trade south. So Home Depot is in a beautiful critical state. All right, next let's look at DuPont. Just a minute. At least let me go back and look. Maybe I didn't have the chart calibrated. Hold on. Oh, yeah, sorry. Yep, there was one hidden. Yeah, that doesn't change. That, in fact, that actually strengthens the case for the long side. Yeah, because we had the big gap. I guess that's Thursday. And then higher low, a white candle. This makes the case for the upside even better. But again, I still think the downside trade is there. If it violates below, say, 78.50, 78.75, and I think that's short. But I would play the continuation pattern as previously shown. Good catch. DuPont continues to meander around. We looked at that last week as well. It hasn't really done either of the things that we hypothesized. We said from here it's either going to try to resume back to the 270 or it's going to fail and continue to drop off. And what it's really done is just munch around here in its new pricing level. Again, I think this one, if it were to get to 66, I think is the long, and your targets are the Bollinger Band mean, the far side of the river, and the far side of the floodplain. I guess I would add the 270 in there. And you don't have much risk on that one. And the stop and reverse is definitely there. So DuPont continues to be, I think, in a critical state. All right, I want to look at ILF now. This was kind of a stealthy trade. All we had in ILF was a breakout above its previous 10-day trading range. This still looks favorable to me. It's had a nice rebound off the bottom. It's had one leg up. It's had two pullbacks. In each case, it held above the 270. The 270 has just said, yep, we're steaming north. And now, importantly, we have a swing low, a higher swing low. And now it's getting ready to take off. I think you could, if you wanted to, you could wait till 39.75, and then it's free and clear. But I'd be willing to just play the breakout of Friday's high and just add to that position and make an extra $1. But that looks pretty good. And if we look back on ILF, yeah, this looks all pretty good. You know, if it clears above 41, then the next resistance is up here around 44, and then 47. So this looks all pretty good. The fact that it's made the two higher lows and getting ready to test that double top again, I think you got to like that. I would add a position at 41 if it broke above this previous swing high, because then it will rush to fill this price level to 43. So I like ILF right there. All right, we want to look at IWM. Now, you may recall over the last about 3 weeks or so, we postulated, this trade from the RL10 up to the 270, that divergence, and it actually caught up, and now it caught up again, and now it's failed one more time. And this is still the opportunity to get back to 118 in the long term, or 119 from 114, and that's very nice in the futures. Very efficient use of your capital. Yeah, so I like this. I like the price action from Friday. It was failure to fail further. We had the big gap down Thursday and good buying pressure. Failure to fail further on Friday. So again, I like this on the resumption of the trend. Looking for about 118 on that one, and 120, 122. I could even see 116.50. So that's $1.50 in the ETF, which is 15 points in the futures contract. So that looks pretty good. Let's see, Intel and Cisco, the last two I want to look at. They were the strength in the technology sector. So if we go look at XLK just for a second here. So XLK is pretty nice. If you compare that to what we just saw, you can see the difference in what relative strength looks like. Here was the gap down on Tuesday, big strong day, and then a second day of buying that takes it up to the previous swing high at 39. So it's already above its 270. So any breakout above there is free and clear, and you can pile on that one. So if that's what XLK is doing, that's kind of a proxy for the Qs. Let's see if the Qs look any different. It should be approximately the same. Yeah, almost identical. Notice the drawings from XLK map directly to XLQ. Okay, so we can now look at Cisco and Intel. So Intel's closer. Oh, very nice. Intel's even better than XLK. So all we got to do is see any kind of upward pressure, and then Intel is free and clear. Yeah. And so long-term Intel, you have to love that. You have to own that. And then Cisco. Basically the same pattern and even better. You can't even see the 270 on this one because remember we said Cisco was so far above its 270. You know, here's where the big gap up hit, and it's held, and it just broke out this week above the previous swing high. Here was the tell. So it's off we go. So Cisco is continue to buy new highs. Each time it makes a new high of the day, you should be buying it and hitting it. This is about 10 ATRs above its 270. And in this period of time, in the last 3 months, the 270 has gone from sloping downward to being sideways to now starting to slope up, and off we go. Okay, so that's everything I wanted to cover today. I'll get this portion edited and added to the YouTube site as well. But the executive summary is already posted. So later this week I'll be doing the day trading workshop in Raleigh, so I'll have a chance to be a little more active next week, Monday and Tuesday, and we'll do some work on Friday and then over the weekend as well. So we should have an especially good weekend report and a discussion this next weekend. So until then, take good care and keep your powder dry and your risk measured. Good night, guys. Have a good rest of your weekend.